Hi, I'm Caroline Gau in the Baird Warner Glenbrook office, and I came in to meet with Lauren Marks. She's our senior loan officer here in the office at Baird Warner with Key Mortgage. Thanks for visiting with us today.
Thanks for having me here.
Yeah, so Lauren and I were just talking about different things now that it's the spring market and getting buyers ready, and she told us about a funny story. So would you share that? I was asking about some things for buyers to get ready so everybody knows that they need to get their pre-approval letter ready and start early. But tell us the story about the cash, because I always say cash is king, but there's a caveat to the cash is king.
So cash usually is king, but in the case of obtaining a mortgage, we always need a paper trail of where did the money come from for your down payment and your closing costs. And lately I've been seeing a lot of people who have mattress money, cookie jar money, whatever you want to call it. And while that's great, we can't account for where that money came from.
So tell me more.
So the best thing to do, and this is what I always will tell, especially a first-time buyer who may not know different, is use your cash to pay your rent, use your cash to buy groceries, buy gas for your car, or whatever you're going to spend your money on, and let your paychecks accumulate in your account. That way we don't have to worry about if somebody would make a large deposit with the cash into their bank, because there's usually no paper trail for that, and that is something when you're obtaining a mortgage that is a big no-no.
So what if you do have cash and you're starting to make the process ready for buying a house? How long could you put that cash in the bank before it would be seasoned?
We always require the last 2 months of bank statements and for any transaction. And when they are gone through by an underwriter whose job it is to approve the loan, they're going to look for large deposits that are other than employer related. If there's a large deposit, they're going to question it, and you're going to have to provide a paper trail where that money came from. Obviously, if it came from the cookie jar, that's going to be difficult. So we don't want borrowers to get into a huge hiccup down the road. That's why the best thing is to get yourself pre-approved early and know what you need to do, what not to do. There's a lot of people that are just not aware, especially if you've never done it before. Like, why would you know?
Right, so when we're working with first-time buyers, we advise that they get their pre-approval letter ready early because it does a number of things. First, it tells you that you're looking at a comfortable price range and you can afford the property. And then also it's important to have that pre-approval letter ready when we're going to submit our offer.
Right.
And so with the pre-approval letter, what kind of things are you asking for with your buyer up front? What are you looking for to get that letter?
So the first thing that I'm going to ask for is to run their credit, obviously with their permission. Secondly, we're going to talk about their income. What do you do? How long have you done it? Where do you work? What's your base salary? If they're self-employed, I'm always going to need to see the most recent 2 years of tax returns, because that's a whole different ball game than somebody that works for a company and they make X amount. We need to really look at the whole financial picture, what their assets are, what their credit is, what their income and their liabilities, and make sure that it works. And oftentimes I find that people are geared toward a specific payment a month. They want to write their check for X amount. And so at the end of the day, it's not even as much about the purchase price as it is what the payment's going to be.
Right. I found that too. So when people say, well, how much house can I afford? We start with, well, what do you currently pay on your rent right now if you're a first-time buyer? And do you want to spend more than that on your next place? So once you figure out what the principal, interest, taxes, and insurance, the PITI, and then if you're doing less than 20% down, you can have mortgage premium insurance, which is actually not as expensive as it used to be. It's almost a good way to do that. You don't have to have 20% down. That's a myth.
Right.
So once you know what your principal, interest, taxes, insurance are per month, we can back into and figure out what house range would be good for you.
Yeah, it's kind of like a puzzle. That's how I always liken it. And so I'll ask them, so where are you guys thinking of moving to? And they'll usually name, you know, a couple suburbs. I'm like, okay, so what you've been looking at, the taxes would be X amount, right? Yeah, that's about right. What are you gonna put down? How much? Well, we're gonna put down this. So now I'm beginning to create this whole scenario where I can come up with an estimated payment for them, and then I'll be like, is that comfortable for you? Yeah, that's great, or no, it's too much, or, you know, oh, we could go higher, and really work with them, because so often people will be like, well, what price house can I afford? And I'm like, well, are the taxes $12,000 a year, or are they $8,000, or are they $16,000 or more?
Mm-hmm.
It really makes a big difference what the taxes are.
The taxes, and then also if they have a pool of money that they're using for their next purchase, what happens if that house needs some updating? Are they gonna put down less money and use some of that up front to do fixes? So,
Right.
and are you seeing a lot of closing cost credits from the seller these days?
If it's not a multiple offer. If it's not a multiple offer, then I would say yes. And we talk about what that might mean for the buyer. So sometimes they'll use it to pay all their closing costs. Sometimes they'll use it to buy down their mortgage rate permanently.
Mm-hmm.
And again, it's like, where could the buyer get the biggest bang for the buck? So for example, I had a loan close recently, and they had a $13,000 seller credit, which was great. We used it to pay all of his closing costs, because the property was in the city, so they had a transfer tax. And then with the remaining balance, we brought down his rate.
Mm-hmm. So that would be used in the event that they probably aren't gonna be refinancing in the next, year or two?
Yeah.
Because would it be kind of wasted money if you buy a rate and then you're gonna refinance right away?
Yes.
So
it kind of like, we'll look at it and run the numbers. If you're buying down the rate and you're spending X amount of dollars, and how much are you saving per month? What's the recoup time? But then the whole thing is the unknown. Where will rates be in a year?
Mhm.
Where will they be in 2 years? The anticipation is they probably will go down. So are you gonna kick yourself that you just spent all that money buying down your rate, when maybe in a year from now you might have had it naturally?
right, that's good. Mm-hmm.
So it's a lot of unknown, but it's like if you spell it all out and give the buyers the pros and the cons of doing those things, then they could make an educated choice.
Mm-hmm. If somebody has a credit blemish, what kind of things can you advise about clearing that up? Do you work with them on an individual case?
We do. So we do have an ability to get their credit sometimes fixed. For example, if there is a collection that maybe was paid, but it's not reflecting, I'll ask for the paperwork and I can get their credit rescored.
Okay. Does that take a while?
Maybe a week.
Oh, not so
Yeah, it's not so long. Recently, there was a situation where something was erroneous on the credit report. So again, we get that fixed. Or if I take a look and let's say they're maxed out on some credit cards. Well, that's, if they can pay some of those credit cards down, that's gonna also improve their credit. So it's free, we don't charge anything for it. But let's say somebody comes to me and they're not looking for 6 months. We can do some things beforehand to prepare them to be their best game.
Got it. Yeah, that's another reason why we want to plan ahead, because
Yes.
that way it'll give you a chance to fix some credit. Maybe it'll give you more time to save, but then the calculation is, can you save over the next 6 months more than you could save with the interest rates going up or the home prices going up. So it's not always the best advice to just, oh, we're going to save for another 6 months.
Yeah.
It might be pricing you out of the market. So there's lots to consider. Thank you so much. We look forward
You're
to
welcome.
learning more tips from you this spring.